It's the evening of Thursday the 28th in the UK, and it is early morning in Thailand on Friday the 29th, which is where I live. So this is a dollar index chart which I'm desperately hoping livens up soon, but we're still in a holding pattern, as you can see on the right side, and we'll have a look at this on the daily chart. Okay, so this is still a bull trend for the last 2 years, for the last year and a quarter. What's important here is the 61.8% fib at 97.87, which, as you can see, has acted as good resistance. We've topped out just below that at the end of last year, and then again this month in March when we hit 97.71. So, bull trend, holding pattern, a break above the Fibonacci level of 97.87 would therefore start the next leg higher in the bull trend. I'm hoping this happens because I'm desperate to find a trade where I can just jump on something and actually run it for a few days or weeks. So this is the holding pattern on the daily chart. It's really this trend line here that's relevant, going back to September, which held so beautifully in the middle of the month with the 200-day moving average, and then we rocketed up past the 100-day moving average, and once we got above there, I said that this looks pretty strong and we could start to test the upper boundaries of this holding pattern, which is unfolding as I speak. So 97.30 is the high as we rebound strongly over the last 5 days, 6 days, and let's see if we can test the 97 sort of 65-75 area with a break above 97.90 acting as a buy signal. Now, if that were to happen today, which is highly unlikely, of course, there's a lot of ground to cover, that would mean we'd close the first quarter of the year with a breakout. So it would be convenient if we closed the week and the quarter above here for a buy signal, but obviously that's unlikely to happen. New Zealand dollar really has just been in one huge sideways pattern for such a long time, certainly all of this year. However, selling it up at the trend line and 200-week moving average did work really nicely if you happen to catch that trade. We've collapsed this week on RBS being very dovish. So now we've got to see what happens down at the trend line around the mid 67 area and see if a break below there signals the next leg lower in what is a bear trend, as you can see from this chart. On the daily chart, there's just nothing going on. We're just in one big sideways pattern. So there we go. I'll expand it out. You can see it's just a mess. I really can't see any trading opportunities in this right now, or the Aussie dollar, which I've not even bothered to show you. Dollar yen has had a good recovery this week, and we are starting to test some fairly important resistance levels. We've got the 100-week moving average at 110.81, and we've got lows from a couple of weeks ago, 3 weeks ago, at 110.77 and 110.86. So you can see that these lows, coupled with the 100-week moving average, are significant. The congestion in the daily chart is just a little bit high. We've got the 500-day moving average at 110.90, and then we've got more moving averages in the middle of the Bollinger Band at sort of 111.05. So we'd have to get up through 111.10, sustained break above 111.10 for this to push up to another pretty decent selling opportunity at 111.45, 111.50. But yeah, watch. Look, it is worth trying short as we approach the 111 area for sure. 110.90, 111.00 has got to be worth a try. Euro versus the US dollar has clearly been in a bear trend for a year and 3 months, very much in the same way that the dollar has been in a bull trend. We've collapsed recently in this horrible sideways pattern, which is just erratic and difficult to trade. So the question now is, what happens down here? If we test this trend line, I've joined the two lows from November and February. We've got trend line at 111.66. I'm wondering if that will be tested, by which time the Bollinger Band, the lower Bollinger Band, will be down there anyway. So we've got support down to from sort of 111.80 down to 111.65. That'll be the level to watch. Break below there will potentially signal the start of a new leg lower in this pair. Gold hit that 11.10 support level and held on Wednesday. On Thursday we broke lower, which I had expected it would do, but to be fair, I thought we would hold at 13.03, 13.02. Looked all right in the short-term charts, looked all right in the daily chart. We were in a bull trend, so I figured, yeah, we've got to get into a long, even though he'd broken his little pattern. Well, completely wrong. We broke down through 1300 and just collapsed. That's the biggest losing day for quite a long time in gold, and certainly the biggest losing week for a while. We'll have a look at it on the weekly chart. There you go. So we had a big move down at the beginning of the month, and now we've got a big move down at the end of the month. What does this mean? Well, the weekly chart is telling me absolutely nothing. The daily chart, we've got this potential head and shoulders pattern. I think I'm right in calling this a potential head and shoulders pattern. It's not a clear one, but I think I can call that a left shoulder, an odd looking head, and a right shoulder. Well, anyway, one way or another, we do have a trend line down here at 1283, lower Bollinger Band at around 1280, 1279, and this rising 100-day moving average coming in also at 1279. So 1283, 1279 is clearly the support level to watch if you feel brave and you want to try along there. We're not oversold yet, but if you're looking to buy it, this certainly is a better opportunity than what I thought was a good opportunity at 1303. That didn't work at all. So this certainly would be a better opportunity. Right, 500-day moving average comes in at 1274, let's call it, and there's a little bit of Fibonacci support around 1276, 1275. So I suggest the trade would be, if you fancy along, buying it down to sort of 1281 to 1279, stop below 1273. That seems a reasonable risk reward. It's not a huge risk. And if things do turn around, we could very quickly be back up at 1300. So the upside is good, and the downside is relatively small. A break below sort of 1273 would signal a move, perhaps as low as 1260. So you want to be quite nimble and reverse out of a long into a short position. WTI crude, we've got this double top, so I called it lower. I called it to 58.25.15 for a buying opportunity, and that proved to be really nice. If you did that trade, it made up for the loss in gold that we had on that long. Yeah, really nice level. We had the Fibonacci level, as you see on the chart. We had the 38.2 fib support on the hourly chart. On the daily chart, we got a 23.6% support at 58.23 as well. So I like that confluence of fibs. And then the 500-day moving average came in there, and then the lower Bollinger Band just below it. Well, it's 58.08 as I write. So that proved to be a real nice level. We got a bounce back of over 100 ticks. So a decent profit on that trade. What happens next? I don't really know. We could just trade sideways for a while. Bear in mind, there is that negative double top. So obviously a break below 58.00 will be a sell signal. And we could quite quickly trade down to sort of 57.00, 56.90. So decent profit potential if you're quick enough to get into a short position on a break. But for now, that support level is obviously is going to remain the most important support level of the week. So if it's retested, could be, you know, try along again and be ready to reverse on a break below 58.00. Dollar versus the Canadian dollar in something of a bull trend of late anyway. We bounced nicely off moving averages and trend lines and all that kind of thing here, holding above the midpoint of the Bollinger Band. So it looks pretty good. Obviously, this week has been quiet with the sideways pattern. What we need to see is a break above the March high of 134.69 for us to signal the next leg higher. Other than that, the chart's a bit of a mess, so I can't really say any more. Stock markets are horrible. This is E-mini S&P. So this trend line held the move, held the bounce back, and then we reversed quite aggressively. And now we've just traded sideways all week as we sort of hold the midpoint of the Bollinger Band. I don't know what this means. I'm wondering if we trade down to this support level down here, which is 2760, 2750, bounce off it, form a right shoulder, and maybe this will be a head and shoulders pattern. But anyway, that's so far ahead, I'm just guessing. The Nasdaq has a slightly more negative bias. This trend line really worked nicely on the recovery, as you see. We rejected it spectacularly with this shooting star. We've got a doji this week, we have so far, depends what happens on Friday, of course. I tend to feel that pressure will be to the downside. This is the weekly chart that you're looking at. I'm wondering if, look, if I put this trend line on here, I'm wondering if this is a, no, not that one. I'm going to use this one. I should use this one. It's the low point. I'm wondering if this is the start of a gently downward sloping channel. This being the upper trend line, this being the lower trend line. I don't know for sure, but it's certainly a theory that could work. On the daily chart, we've got a decent trend line going back to December, which comes in with the midpoint of the Bollinger Band at around 72, call it 72.60, 72.50. So break below 72.40 should be a short-term sell signal. And in the Nasdaq, we can quickly target 71.70, 71.50. We've got some support down here from moving averages, which are going to sort of meet up at around 7100. Well, we're a long way from that, so we'll review that along the way. But just watch for that break below 72.50 for a little sell signal. Possibly a similar scenario on the Dow Jones. Possibly these trend lines here signal a new pattern. It's early days, so I'm guessing certainly we rejected this. We broke this trend line, and once that was broken, we rejected it. Okay, a bit wishy-washy. I think I've got a bias towards the downside in the stock market. It's just because it looks like the economies are weakening, but that's not really enough of a reason to short. If we do break below, well, what is obviously good support around 2500, 25,450, sorry, 25,500, 25,450. That's what I'm trying to say. That's a good support level. Break below there is obviously going to be negative, and we could quite quickly trade down to 25,190 to 25,120.